Hello there, Heidi ho everyone, and welcome aboard. It is now Thursday, last day of our trading week as far as YouTube is concerned. And if you're a Friday trader, then obviously you'll be trading tomorrow. I'm going to have to start being a Friday trader. I think there's too much happens these days on a Friday. It seems the week builds up and builds up and builds up, and then it just releases on a Friday. Well, that's something that we just have to adjust to, I guess, because you can't really predict these things. I don't know why. It just happens, seems to be the case at the moment. Anyway, interesting ones today. We've had, I won't say a reversal. G'day, LT. I won't say a reversal of opinions on the coronavirus out of China, but I will say an adjustment on the numbers of the coronavirus deaths and indeed new cases. Market had a good reaction or a strong reaction to that earlier today, and I coincidentally I found a short Aussie Swissy that I'll go through in a minute. Yeah, jump in corona deaths, that's right. But the market seems to have shrugged it off to some degree. We will have a good look at that in a minute. As I said, I did place a short on Aussie Swissy, and I still can't believe that, well, the way things work, got taken in on this candle here. We're trading a false breakout on a single bar. So we're trading this bar here. And I was in front of the charts for quite some time. I hadn't long placed the order, as a matter of fact. And then I walked away from the charts for no longer than 10 or 15 minutes, came back, and bingo, we'd been taken into the trade. And my TP1 was actually above the monthly pivot, but because of the quick reaction, g'day Lewis, to that announcement, I got slipped into the market and my TP1 didn't get hit. Gotta love that. You just gotta love that. But I figured that, this wouldn't be a problem because the reaction would just continue. Yeah, well, it hasn't to date, with 2 minutes to go before we jump into the UK session rather. We seem to be just about exactly where my entry is. So we shall see. I really feel like just closing it and getting out here, but I really can't imagine why we would be seeking new highs under those conditions. Wouldn't make any sense to me. But then the market doesn't have to make sense, does it? It just does what it does. Anyway, my TP1 is still well, it's actually bang on the monthly pivot now because I got slipped into the trade. Anyway, let's set up the pound trade for today. And oh my goodness, what a big candle we have, and just shy of the weekly pivot. Yeah, look, wouldn't be trading this other than this particular system that we're trying to work out. But there you go. I'll set the short because it's not going to change any in terms of the entry. So the entry for the short would be at, I have updated the stats on this too, by the way, and I'll show them to you in the not too distant future. The short will be 129.34. Sorry, 129.39. So 1.2939 for the short entry. Better hurry up with this long, huh? Just in case they take off. 129.39. Stop loss will be 15 above there, which will be at 129.93. 129.93, there we go, and we'll reverse that, of course, for the long. So I've got to remember those, 129.93 and 39. That shouldn't be that hard, should it? So let's go long. $129.93 and 39. Rightio, there we go. And both orders now in the market. Actually, don't mind where they are. they're above the swing high, and it's below the swing low. That doesn't look too dusty to me. It's actually a break of today's range, and I can live with that. All right. So yesterday, what happened yesterday? We'll go to this one. Yesterday, let me find the candle first. Why don't I see the entry on here? It's a bit weird that sometimes that arrow pops up, sometimes it doesn't. So it's on neither chart. Okay, I'll have to rely on going back to the 9 o'clock bar. Yes, oh, there it is, right there. There. That wasn't hard, was it? So the entry was long, and it was long at 129.85, which, let's put that on the chart. 129.85, you can see it wasn't a good entry, and that's for sure. 129.85, we went long and at that level. So let's make that on the 15-minute chart, which is there. 129.85, we went long, and then we came down rather quickly and started going up. Fortunately, because our stop could then trail to there, and when this candle formed, it could trail to there. So we actually lost 6 pips on the deal, and a small loss, which resulted in, I can't remember exactly, 0.1 or something or other. Let me go to the chart, and that will show you exactly what the situation was. So there's the up-to-date chart, guys. 0.13 was the loss yesterday. Wow. We could wipe those 2 and 3 weeks out, we'd be doing okay, wouldn't we? But we can't do that. It doesn't quite work that way. So overall, here's what we've got. We've got a win-loss ratio, 24 wins to 31 losers. We would love to increase that, of course, which gives us a ratio of 43.64%, which is enough, of course, to keep us buoyant. But gee whiz, if we could start the month of January over again, wouldn't we be far better off? That's what it looks like. After a good start through November, December, and around Christmas time, we started to lag a bit with 4 or 5 losers in a row. Then we had, and I don't think I've ever experienced this in my trading career, 15 losers on the trot. Wow. That's enough to to make your hair curl, isn't it? 15 losers on the trot. And we went from around about 11.5% here down to 4.5%. So we lost 7% in the month, pretty much, of late December to end of January. Yikes! Let's get rid of January, huh? Yes, LT. They're not pleasant. That's a fact. That is a fact. The only thing you can take away from that, well, sorry, it's not the only thing you can take away from that. The thing that I'll take away from that is, as I said from the outset, if we can keep our losses small, and really we've only had 1, 2, 3, 4, 5, 6. So 6 of the 31 losses have been full tilt. And of the winners, 1, 2, that's the kind of one we want, 3, 4, 5, 6, 6, so it's no, 7, 8. 8 have been bigger than 1%. So that's the reason that we can stay in front of the game. Oh, you missed some winners as well. Oh dear. Oh dear, oh dear. Your balance sheet's not looking too flash on that one then, I wouldn't have thought. I guess, and I hope that it being a beta strategy, that we haven't been trading this with big numbers on the table, guys. I've been doing it at full tilt, so 1%, except on Mondays where we've had a bit of a crash over. I think we won this Monday, didn't we? Yes, we did. Last 2 Mondays have been winners. Okay, so we've now got, what, 1 week to go. So next week is the end of the trial, and I'll spend a fair bit of time going through those numbers as I get time and see if we can iron out a few of these issues to start with. So what I will concentrate on is having a look in this area and seeing if I can actually improve that by simple observation. I'm pretty sure that that won't be too difficult. I've got a very funny feeling it won't be too difficult, to be fair. All right, so that is that, and we'll put that aside for now. We've got a bit of a new system going on here, guys, in that because it really is a distraction for me in a 45-minute or 1 hour format to actually analyze all the pairs that I'm now trading in that short period of time. Decided to cut that back to the majors, trade the majors only in this session, and which was normal practice for me anyway in the Open of London session. In fact, the only currency I used to trade was euro dollar in this session. So I'm actually going to trade only the majors. So that's the pound, the euro, dollar yen, dollar Swissy, dollar CAD, Aussie, Kiwi. That's it. So just the 7 currency pairs that I'll be trading in this session. Going to update in a folder on what's it called? Dropbox, that we are going to share with you guys, and all of my other thoughts will be going into there. And I think that begins next Tuesday. I'm not sure. We're also going to conduct interviews, and those interviews are going to be conducted with traders that are not associated with Actions to Wealth. So in other words, we're going to expose you to other traders around the world, other successful traders around the world. We certainly won't be trying to put unsuccessful traders in front of you. That's not a great idea. So we'll be doing that once a week. We'll be inviting a different trader from around the world, one that doesn't trade our strategies or anything like our strategies sometimes, and we'll be showing you exactly how they make their dollars, and that should be an interesting segment for you each and every Tuesday. We're just going to have a bit of a practice next Tuesday with that before we put the invited traders in front of you. I think we're going to interview the boss man of Actions to Wealth, Paul Botterill, and we'll get well, most of you probably don't know a lot about how his career started, how it progressed, and all those sorts of things. And that's the kind of interview that we'll be having with the traders from around the world that we do invite to the show each and every Tuesday. So we'll give you a little sample of that next Tuesday, and see how we go there. As I say, the minor crosses that I don't trade in the Open of London session for reasons, as I said, I can't keep up with them all over that short 45 or 1 hour period. They'll be going into a Dropbox. Ash will also be putting his thoughts, which are subsequent to this show. So when we finish this show, Ash will be putting his thoughts on the FTSE in that same Dropbox folder that you guys will have access to. And as I say, I think that may well be starting next week. We shall see. All right, let me go back to the charts, and I guess we could start with the pound, couldn't we? We can do that. No entry yet on the pound. The entries, if you are just joining us late, for the long are 1.2993 for the long and 1.2939 for the short, and of course vice versa, 1.2939 stop loss for the long, 1.2993 stop loss for the short. Now, what was I going to say there? Oh, those of you who are in the show for the first time, this is a beta test of a strategy that we're trying to develop, which is based around the first, or trading the first candle of London session. And so far, this is it. So not a whole lot of power going on there at the moment in the first candle of London session. Speaking of the first candle of London session, traditionally I do not trade the first candle of London session. There's a very good reason for it. The reason I don't trade the first candle of London session is because I simply could not get a win-loss ratio that was anywhere near acceptable over many years of trying. I think the reason behind that had a lot to do with in those days where I was just learning the trade, it was very much a case of there would be a news announcement bang on the open or just before the open or whenever, and the candle that I'd be taken in on would reverse almost instantly. And everybody knows what that's like, right? Not the funnest thing. And that just continued to happen to me. So it's just one of my things that I no longer trade the first candle of London session. But here's how I really haven't had much time to go through exactly how I do set things up for the day. And let's do that now, shall we? So I can concentrate a little bit more on the major pairs. There's absolutely nothing doing for me here, so I can just move straight on. And the reason I know that is that I only trade at confluence areas. And there's absolutely no chance of me being at confluence area on euro dollar anytime soon. So I can just move on straight away. And dollar yen, I've been in this trade for quite some time. Seems like weeks, but I think it's only 1 week, maybe. Can't quite remember now. I've got no idea where I got into this now. See what I mean? I can't concentrate over too many pairs. Would have been on a daily.
Sorry, mate. Just giving you a quick update. I'm still, I'm just in management mode here, just to give the guys a update here
sure.
as well. Just in management mode. I can't quite need to do what I need to do. So I'm just concentrating, but I will be in as soon as I can.
Too easy, Cam Peasy.
Are you all right though?
Yeah, mate, all good. I'm just trying to remember how I got into this trade, and it was when I came back into this range. That's right. So came back into the range, and we got this bar here. So that's the bar that I traded, as I recall. Stops are still up there. Why I've left them up there is probably a good question, because when I hit the bottom here, I probably should have trailed, but I haven't done that. So out of the money at the moment, but of course I've taken profit, and I can only win on this. But if it goes back to the stop loss, then I'll win just about nothing. So yeah, hoping that can come back inside the range. If you're not in the trade, as most of you probably wouldn't be, because that happened on a Friday, believe it or not, I traded on a Friday. No, it happened on a Thursday. Yeah, so I traded on a Friday, that's right. So there's really nothing to do here, as I see at the moment. And the 30-minute charts are interesting, but only because we're getting near to back inside that range. Again, I don't see any confluence, so there's no urgency in trying to even jump in the market. I don't know why I've got dollar Swissy there like that. Let me bring up another chart with dollar Swissy. Oh, sorry. It's the button I need. Dollar Swissy. It's got to be up here somewhere. Ah, top of the tree. I actually lost my profile, guys, when I was trying to set this thing up today. Hopeless. Absolutely hopeless. There we go. That one will do. So the analysis chart, which is generally the daily chart, is giving me a new high here and potentially a breakout of this mini range that we've been in. Interesting. Don't mind that. But untested weekly pivot. That might have been an interesting bar to trade. Stop loss above here, but very, very close to the weekly pivot. So answer on that is no, but I can definitely see this being an opportunity to trade down to the weekly pivot. So now I'll drill down with it. Now that I've got a semi-bias, I can have a look at this 30-minute chart and go, well, okay, is there an opportunity here to trade at the moment? Answer no, but again, I don't have any confluence area. So I need trade lines. And there may well be one that comes up through here anytime soon, in 12 minutes time, in fact, when this does become a low. And that then gives me an opportunity. So I could well be looking for a break and retest of that, or maybe get away, come back and give me a low test bar, and I can maybe look to trade that as a breakout. We shall see, but there's nothing there at the moment. You can see what's happened here. Price has gone up to the resistance area and now come back to the support area, which is very, very clear. We'll see how that actually pans out. And I may do a little bit more analysis on that as we go through. Let me get rid of that control panel. There we go. So interesting. Little hint of what I call three little Indians here. So false, false, false again. But we did go down. Yeah, it's a little bit tricky, I've got to say. We do have a lower low and a lower high just in place. It's a little bit tricky, I've got to say. Break and retest, I think, is the way I would go there. That brings me on to dollar CAD. Now, dollar CAD, I'm also in a short trading this bar here. And yeah, I don't mind the look of this. It's similar to dollar Swissy that we've just looked at, where we've had false, 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 and then a break of that false area. Now a retest of the daily pivot. Already had one, already had two in that area, which is primarily the breakout area. And maybe now we're getting a daily pivot test. Maybe it can bounce off here and get down to monthly pivot where I'd like to see it. But I don't like the pause here. It's not paused at I suppose if you look at that level, it's coming off that level. So I'm okay with that part. But I would like to also, maybe we get a weekly pivot test and then go. Maybe the daily pivot. I haven't really got a firm idea of what happens next. Let me look at the 30-minute chart and see if we can find a confluence area once again to get me interested. No real resistance line there just yet because I don't have a swing. But if we do, that becomes interesting. It will probably look, you can take it from anywhere really, because there's only going to be a couple of tests. Let me see if that hooks up. Don't think it will. Pretty closet, but it does give me a confluence area. So if we break here, get above the trade line, back underneath it and retest it, that may be an opportunity to go short. A little hint of a flag pattern sitting there on a downtrend. That isn't a short-term downtrend. What's the medium term like? It's down, so there's the retracement. Yeah, doesn't look too bad on the smaller time frames. I'll go with it, but I would like to see that lower high, and if that's it, then happy days. So we may well be in a tradable position there on dollar CAD. How's oil going? I think oil rallied a bit yesterday. I'm not sure how it's going today, but we're not talking oil. We're talking dollar CAD. The reason I ask that is because the CAD, of course, is not tied to the oil price, but it certainly doesn't hurt when oil goes up for the Canadian dollar. And I think the Canadian dollar is probably one of the strengths in the currency world at the moment, because good numbers coming out of there. The interest rate differential is still there in favour of the Canadian dollar, and the data coming out of there is looking okay. That said, there's a hint of ascending triangle forming here. If you can't see that, let me point it out to you. So we'd probably call that the flagpole. We'd definitely call those the equal highs, and what may well be shaping up here.
Sorry, mate. Just really quickly, there's a buying opportunity on the FTSE here. Now, I'm not going to take this because I'm in kind of I'm in management mode with trying to get my downside properly. Just want to let the downside go, but I'm just waiting for a little pop to the upside. But I think the pop to the upside could happen here. So, if anybody is interested in trading this, let me show you what I'm seeing.
Happy days.
I think you might have to give me the screen.
Ah, yes, there is that.
Okay. Yeah, we just come and close this gap. That's the kind of like the significance of where we currently sit. Now we're at 74. Well, you got to try and get in really, because this market's moving pretty quickly. Maybe if you do let this go, if you don't get the first wave, then you want to try and get it back down here again as 16. But looks pretty good for a bounce to the upside. I mean, we've had a huge drop this morning due to that coronavirus update. You may know more about that than I do, Jeff. Just what I've heard is that they've changed their testing, and they've discovered a few thousand more cases. Is that right?
Yeah, that's pretty much the upside of it. But as a result of the way that, and I mean, this is mysterious to me, really. I'm not sure how you change the way you count, but that's what's hit the headlines this morning. And I can't quite remember the numbers, to be fair, but 200 odd deaths or deaths yesterday, but something like 1,500 new cases, as I recall. But yeah, look, again, I can see it in the FTSE, and I can see it in a couple of places, but can't really see it where I want to see it, which is in my Aussie Swiss trade short, which is now out of the money. It's kind of weird.
That's interesting, mate. That's interesting, because the Aussie Swiss, as you say, that should be creating that, shouldn't it? Where is the Aussie Swiss? Yeah,
it should be,
because gold is popping. Aussie Swiss, yeah, it's funny actually, because looking across the board, I'm looking at the S&P. I just had a quick check, kind of across the markets. S&P, has also struggled so far this morning and moved to the downside, but it doesn't look that bad. It's also, well, it's not really at that point just yet, but it doesn't look that bad. It's a fairly significant reaction from what's happened with the FTSE. In comparative to the other markets. To see the gold is again, it's popped up a little bit, but even that is on this first hour is drifting to the downside. The Dow Jones Industrials just under the daily pivot, but not a huge kind of drop so far. And the one that never seems to come down, the Nasdaq, is dropped just a little bit, and maybe creating something of a reversal up here, but nothing that significant. The FTSE has dropped a lot further, which is why actually the upside does look pretty attractive with the FTSE. It's dropped a lot harder than the others. I suspect that's probably got something to do with the pound as well. I'm seeing the pound having a little bit of a surge so far in the first hour of this morning. So that's probably got as much to do with the pound as anything else. But now the pound's on weekly pivot area, it's on this resistance zone. Then there's every chance that the FTSE would retrace just a little bit. Now, there's no doubt about it. The shorts are where we want to be. But if you guys managed to get into that long when I was suggesting it, which is only 3 or 4 pips ago, but if you're in so far with stops at the lows, then maybe this is a long to go short, because I think the market probably it is due a significant correction, but we haven't really seen seen what would create that, and the coronavirus certainly started it a few weeks ago, didn't it? When we kind of looking at this coronavirus and the news and data from it, this was the initial reaction, but this retracement has been fairly significant so far, because there was no further negativity, but I do see that there's some problems now potentially about to arise again. So the short is definitely the play. But there might just be an opportunity for a final long. And if you think about it, then really all you're doing is getting the lower end of the structure of the trends on the 4-hour chart, because this is where it bounced from before. So there's the support on the 4-hour. So it should at least, if it is going to break this down, it should at least test that area. But what you're playing is the fact that it closes at least on that particular zone in the next half an hour, and if that was to happen, then there's every chance that we ease back to the upside one last time before looking for the short properly. Yeah, quite like a little short-term play to the upside here, mate.
All right, bud. Then let's hope that kicks in and away you go. I'm not looking for an upside. I really don't get it, and I'm almost at the point where if this doesn't play out, and we get new highs on Aussie Swiss today, I just think that I need to shut my ears and eyes and trade when it's news time, and just trade technicals. That's the way I feel about this.
Oh, do you know? Yeah, it's an interesting point you make, mate, because I've kind of been caught that way a few times, but it's one of those that I think the thing with the news is that it appears to be more of a slightly longer term play. Obviously, sort of the reaction that we've seen in the FTSE 100 this morning is maybe suggesting otherwise, but it's a difficult one, because actually the facts, when the facts are reported, it's usually pretty bad, and it usually creates some downside. But the kind of speculation on what might happen, would normally ease the market in the opposite direction. But I think if you take this news play as a significant turning point of disruption that could possibly create some disruption, then I make you right. And it's just the difficult thing is timing it, isn't it? Ultimately.
Yeah, look, the weird thing, Ash, is I didn't trade it as a news event. I was in the market before this hit. Sorry, right. Sorry, the order was in the market. I wasn't in the trade.
Yeah.
And I was stunned. I walked away from the charts for 10 minutes this morning. I'd only just placed the trade, and went downstairs to get a cup of tea. So I've been in the office most of the day, and I came back, and not only am I in the trade, I'd gone through my TP1 mark, but I was slipped, of course, so therefore I didn't get the TP1, and I was trading it on the EA, so the EA didn't take the profit, because we went through the level with slippage. So you can imagine my shock and horror.
Yeah.
Now that I'm behind the 8 ball and going, oh my God, I actually should be in front here, but I'm not.
Oh yeah. Well, this is kind of like what's happening here, and this is why I'm in management mode. By the way, that this is the trade right now. So the trade is at this point here with a stop at the low. So you're looking around about 15 pips stop. And there she goes. So I don't know how far this is going to go, but the trade is definitely here. If anybody's interested in trading this long, this is a decent looking long to me. 15 pips stop loss, and who knows, we might even come and close this gap. I mean, it'd be very surprising to me to actually see this thing turn around. But I think the minimum you're aiming for is at least 30 pips. So you got around about a 2-to-1 trade. If you've managed to get into this market, but this is the trade right now, here and now, long. to the upside. So anybody looking to have a little go on the market, then this is the time, I would say. I would suggest.
Right, mate. Happy days. Back to you as you can, and I'll just go through the 30-minute candles on the majors because that's what we're doing, and I'll pinch the screen and go from there.
Cool.
Rightio ho ho. So I got through dollar CAD, which I'm in, Aussie dollar. Yeah, befuddles me, absolutely befuddles me. But there you see it in front of your very eyes that the Aussie is rallying almost back to where that news event happened this morning. When I say news event, it was just an announcement that unscheduled came out of China, and bang goes your mangoes for the briefest period of time. And I do mean the briefest period of time now, because within, 8 hours or something, here we are back to exactly where we started. That's not a very bearish sign, I've got to say, nor is this candle, which is of course the result of that, has broken and retested not only the trend line but the weekly pivot as well. So you've got to be thinking technically that this is going to test these highs at the very least, and if it gets through them, then I'd be looking for a retest here, and I'm just going to have to change allegiances to the high side, because that looks extremely bullish to me, given what we've seen. Now, that said, there's no reason fundamentally, and this is where I'm struggling. Fundamentally, you can't go long here on Aussie US dollar, but technically, it's a very, very bullish scenario that I'm looking at right now. Am I willing to trade it long? Well, I have to trade it long if I get a setup. I don't have a choice in that. It's a matter of, okay, if my strategy calls for a long here, then I simply have to trade it. So let me get rid of that line and see where we are. Significant level that we're at, of course. It is a retest of the daily pivot, which was smashed with that news. It's also a retest of these highs here. If you go out to another time frame, you could probably be excused for calling that a head and shoulders. It's not there yet, but it may well be there. I prefer to see a head and shoulders up here at the top of a long extended rally, well, trend. Let's not call it a rally, let's call it a trend. This is not a long extended trend. In fact, at this point in time, you could probably still call it a retracement, but it does look so it wants to reverse here right now. I've got to say that. And where do I get that point of, okay, I've got to trade it? Well, here's how it works. I've got to see this level go and be retested. If I see it go and price gets back underneath here, on the other hand, and retests it from below, then I go short. So this is the line in the sand for me. If it breaks and closes above this high, then there's every chance that this will go to the monthly pivot, as far as I can tell. That is Aussie US dollar. Kiwi. Now the Kiwi, I suppose by default, even of virtue of the RBNZ statement the other day, if the Aussie's going long, then this should go long. By definition, this should be currently a stronger currency than is the Aussie. This has already broken resistance. Had a little fiddle with daily pivot. When I say a little fiddle, it's been there all day, and now we've come back off it. That's a very strong candle that we're looking at there. Whether we get an opportunity to trade this long is another story, because it looks like the market has made up its mind early on, and it's going for the doctor, it would appear. So a little bit too late on that one, it would appear at this point in time, but it's only a little, 4 or even 5 pips. It's not the end of the world, but it does look bullish, I'd have to say. to get short here, if I was short biased, which I am, because it is a commodity currency that will suffer with the shutdown of China. That I just cannot get around that point. Obviously, the world is still thinking, or is being told, that this is not a serious threat. Okay, we'll go with the world because the world knows everything. I disagree 100%, but anyway, as long as it doesn't cost me money, then it doesn't matter to be opposed. I'm just waiting on the opportunity, and if I see an opportunity, every opportunity I see, I'll take. If I'm wrong, then it's going to cost me money. It's as simple as that. If I'm right, I think we can probably make a good quid out of this scenario. Anyway, we've banged on enough about it. I'm desperately negative all of these commodity currencies because I think there's going to be one substantial shutdown of resources and therefore exchanges of currency. Primarily Chinese yuan for Australian dollars, Kiwi dollars, Canadian dollars, in those direct terms. So that's what I expect to happen. Righto, it's not happening at the moment, but that doesn't stop it happening a little bit later down the track. There's the Aussie Swissy, as I said. I'm now out of the money by about 10 pips, looks like it. I can't even measure that because I haven't got my thing. There it is. Yep, about 10 pips out of the cash. We are at a support level, a resistance level, of course. And if I'm trading this as a pure slingshot scenario, I've now got a good reason on the 4-hour chart to put a short underneath that bar and a stop loss wherever that bar closes, unless it closes down here, of course. But if it closes on or about where it is now, then that will be a second entry for me. Would I take it? Look, I would, absolutely would, because I am biased in that direction. So yes, I will be looking at that. Aussie Swissy. Let me see if I can actually trade that on the 30-minute chart with the new 30-minute candles. Again, we've got to get rid of that because it's not applicable. The only real opportunity I see to trade it is as a false break, as always, and that's what I'm looking for, as always. Something through there. So get up to here, match these highs, get back underneath it, get back underneath the daily pivot at the same time, then retest this trade line from below. That will be my signal to go short. If I'm not already in the trade, which I am, of course. But for you guys, if you're not in the trade, that would be my counsel on the 30-minute chart. So let it break, find the as resistance, back underneath, retest, and away you go. It's a very similar scene. And finally, dollar Swissy. This one's a little bit more interesting because if you're thinking risk off, then you're probably thinking that safe haven currency, Swissy, dollar, yeah, they're not too far apart in that degree. What really amazed me is Jerome Powell's testimony that I saw a snippet of only. I saw a snippet this afternoon on Bloomberg, I think I was watching, and he actually said that we are now in a low interest zone that is no longer
the norm, he said, didn't he? Yeah.
Yeah, he backed it up with the norm. I can't remember the first words he used, but the other thing he said was that you can expect that there will be more to come. And
yeah, did he? I don't think he said that there would be more interest rates cuts.
No,
I think he was talking
interest rates. but there'll be more monetary policy on
That's
the way.
right. That's right.
And that kind of shook me. I thought, oh, that's interesting. And that kind of gives me the impression that dollar Swissy is also a sell. But then I'm going risk on, risk off, and I'm thinking risk off. And at the moment, I'm not seeing risk off. I'm seeing risk on, and it befuddles me. But I've just got to stick with what I'm seeing compiled with what I'm hearing. And when I hear that out of the Fed chairman, I've got to be thinking that the market's going to listen to that. I'm not the only one who heard it, obviously, and the market will react to that at some stage. I'm not sure when. Maybe today, and if it does, I'm definitely a dollar Swissy bear. So, how do we get that into perspective?
Yeah, that's a really interesting one, mate. I completely agree with you, and I was listening to his comment as well. What he did also say was that the time isn't right, and that's because I listened to the whole speech, and he was talking about the fact that the monetary policy would play a part from here on in. That there would be different tools that would have to be used. It would be unlikely to lower interest rates anymore, but there would be different tools to be used. And I think he was talking about forward guidance and more asset purchases as well, which is effectively more QE, isn't it?
Yes,
but he did say that the time wasn't quite ready yet, but they were ready to. They would do that if the downturn happened, and I think that was more a reference that do they have the tools with interest rates so low? That was the question. Was do they have the tools to deal with a downturn if it was to happen? And that's the way that he said he would deal with it from here on in, not by lowering interest rates, but using asset purchases and forward guidance.
Okay, so it wasn't him. And as I said, I only got the soundbite. I didn't get the whole, which is incredibly deceptive at times. That's exactly how they play it. So
yes,
I'm glad you were listening to all that, because it was a little bit deceptive from what I heard.
Yes, yeah. But he was testifying.
The tone's still there.
Yeah, undoubtedly. I think that the major tone that continues to come out is people are asking a lot about this downturn. He said it wasn't right yet, but there does seem to be a concern on Capitol Hill that a downturn is due and potentially won't be long in coming. And I think that was the significant tone that I garner from this stuff.
Yeah, again, quite interesting. And I think if that trend line were to break in this confluence area, there's a fair bit of support through here in the last week or so. If that were to break and we get a retest of the confluence, I think I'll be ready to go anyway.
Yeah.
I'll be okay with that. That's the 30-minute chart, so I'll be watching that one. Aussie CAD is now no longer a reference point, Lewis, but I'll give you my opinion anyway, because I do have it on another chart, of course. And, well, again, I've got to be a bear. I'd like to see oil continue to rally to help out the CAD, but I'm definitely a bear. I think that we've had a sell-off already, and we're now having a retest of around about the 89.20. I think there's a potential trade coming up there short as well. And I'd like to see price just settle down in this vicinity, then come back at the trade line, which is kind of going from, I know you can't see that chart, but I've got a support trade line going through there and a resistance trade line coming through on the 4-hour chart, which is a pretty much an equilateral triangle. I'd like to see the top of that break and come back underneath it again. So I'd like to see it rally to about 89.40 and then try and bounce it off there. I think that would be the way I'd be looking at that. But this all kind of hinges on me being right that we've got to go risk off, and I just don't get why we're not. So, if I'm wrong, then those levels won't concern anybody. It'll just fly through them anyway, and that's the approach that I'm taking. I've got to see a resistance break and then be proven false before I can.
I think you're right, mate. I think you're right. I just think that for whatever reason, the market is still holding up. It might be the US session. Maybe we wait for the US session, and that's what people are waiting on to see whether the US actually also sell off, because they're going to be the true probably leader to the downside if it is coming. So I wonder whether that might be why we're still seeing the market hold on. I mean, the FTSE is giving us a fairly clear indication that the coronavirus is a concern, and often the FTSE does lead as a barometer. So I think as a leading barometer, and also gold. Gold at 1577. Both of those two markets I think are indicating some concern. And it's just a case of timing the market right in the opposite direction.
Happy days, mate. I was telling that I've got no more really. I think I've been through the majors, and that's pretty much as I was telling the guys earlier. That's the new format for me because now it gives me more time to concentrate on the pairs that I want to trade rather than have a look through everything in this 45 to 1 hour period. Is pretty difficult to go through all of those charts. So concentrating on the majors is the way that I'm going. I was telling the guys that we're going to give them access to our Dropbox. I think maybe as early as next week. I'm not sure on that. Was that right, or?
Yeah, I think it is. Yeah. And you might have to help me out with that exactly to know. I'm not really sure what the process is, so you might have to help me out a little bit.
Yeah, I was struggling this afternoon myself, but I actually got it in there, so that's all good. So that will be. Well, I think we're trialing that one next week, but certainly we're trialing the interview, the Tuesday interview. We haven't got a name for that yet, where we're going to talk to significant traders and profitable traders around the world and give you guys a little bit of an insight as to how they make their money. And that's coming up as of next Tuesday, the first one of those. That will be more of a trial thing where we're going to try and iron out exactly how we get around doing this. And the first interview will be the CEO of Actions to Wealth, Mr. Paul Bottrell. And some of you probably never heard his story. And we'll be digging deep into the Kiwi, the big Kiwi, and seeing exactly how he's come to the wonderful position that he finds himself in today. My strategy to trade gold is not to trade it, Chris, but Ash, I think, has probably got a little bit more of an opinion on that. How do we refer to the link to the Dropbox? That will be given to you. I think it'll be the same every day, but I'm not sure. As soon as we've got that open for you guys, we'll give you the link to it. And there's a few other things going on as well that we're hoping to get to you guys. And as the year progresses, there'll be more and more of this sort of thing. So stay tuned to this very place. Ash, strategy to trade gold. Have you got one?
Well, gold's an interesting one because it's because it's a commodity. I find the COT report a lot more interesting with that. Oh my goodness me, with something like gold. But it's the commercials are heavily selling gold, which suggests that the gold should be coming down. But the issue really right now with gold is it is a safe haven play, and it's going to be, I think, a little bit too tricky. Really, what the strategy I'd be looking for personally with gold is to go with the commercials at some point. We got to start looking at the possibility of a decent pullback with gold. I don't think I'd be too comfortable calling out the long at this particular stage. I think we should be looking at the short, the long, at the short with gold, but we're going to have to let this market calm down. And I don't think it's the time. Everything ultimately is about timing. So, right now you could trade gold in a range and continue to look for upside on the short term because of the issues that we have out there in the world. But really, I think the gold play has to be looking for the short. But it's just very, very bad timing. The longer play, it has to be looking for the short. But right now, I think you've got to go for short-term upside. Continue to play the short-term upside. Maybe build into some short positions with some short-term upside. But aside from that, mate, I'm not interested in trading gold at this stage. I think that the indication is just too mixed. The commercials are short, so that suggests that there is some dumping that's going to happen at some point. But the market right now is just too concerned with world events for us to trade it in that direction.
Yes, and as they change from day to day, minute to minute, that's what you're going to see in the gold price. It's just going to be really volatile and hard.
I totally agree. I mean, I think that the best market you can trade right now is the Nasdaq, just because the Nasdaq is just so bullish. It's just it's easy to know what to do with that. Just go long and go long and go long. But the thing with the Nasdaq is that we've got to see. I wouldn't go long today, particularly because we just had this new announcement about the coronavirus. But I would certainly be looking at the long in the Nasdaq when that calms down, or if it calms down. So that's. The other reason I think the Nasdaq's a really good market to trade is that tech seems to be the the era that we're in. We are in the era of tech. So if any market is likely to be continue to be propped up, it's probably the tech market. So I think the Nasdaq is probably the easiest market you can trade right now, just because you're only looking in one direction.
There you go, Chris. Hope that helps, mate. I'm not one who trades either, so not qualified to comment, except to say that I can't trade it because I've never, ever sat down and had a good look at it. It's just something that's never
It's just that you see with the Nasdaq, the Nasdaq's an interesting one because every single sell-off, over the course of well, I don't know how long. I mean, I can show you. Let's have a look at a chart together very, very quickly here. If you let me share screen again,
absolutely.
Mate,
and I should stay in the room this time. Chris, I'm not 100% sure on the answer to that question, mate. I'll have to take that on notice and get back to you. I would imagine that will be the case for ATW subscribers. For non-ATW subscribers, I guess it will be posted. It'll definitely, no, that's where it'll be. It'll be in the in this YouTube channel. That's where it'll be. So it'll be posted in there.
Yeah, look at the Nasdaq. This is the Nasdaq. It sells off hard. It becomes a buying opportunity to the upside. It sells off hard again. It becomes a buying opportunity. This is a 4-hour chart. But if we look at this on the daily. And just think about market structure. So this is August last year when the Nasdaq was kind of like at its turning point here. We start to move here to the upside. This is the low end of the structure. That's the high end of the structure. That's the low end of the structure. It comes down to the low end of the structure and it creates a bounce point. This is the high end. That's the low end. Again, it comes down, tests, and it goes. And there really is the high end of this move here. Comes down to that particular point and it goes. So if the Nasdaq falls down here, maybe the opportunity's there, maybe it's there, but it just suggests right now that any opportunities that the market takes to sell off, the Nasdaq is clean enough to keep going. When you look at the FTSE, it's very, very different. The FTSE on a daily chart is really all over the place. Sort of, if anything, this is in a downtrend. Not so much on the daily, but certainly when you look at the weekly, look at this current bar right now, and this has really been formed so far from today. So I'll be interested to see what happens with the FTSE 100 by tomorrow. to see if that does give us something of a reversal bar there, because it does suggest that the market could fall fairly heavily. But again, you know, FTSE pretty choppy in comparison. This move on the Nasdaq has been fairly parabolic to the upside, and you know, we could probably compare that to a degree to the Dow, a little bit scruffier in this area here. You know, we're looking at December 2017 there, looking at the S&P, again, a scruffy little area. And just to reiterate, you know, Nasdaq, the scruffy area on the Nasdaq is, I think, less extreme. You know, it doesn't move in anywhere near. It's a lot more gentle, the way that the Nasdaq moves. So I would suggest that that if you want, say, the simplest market to trade, then look at those. Ichimoku clouds are quite useful for picking out strong trends, which maybe we'll get to next week. Actually, maybe we'll have a little lesson in the Ichimoku and show people, you know, how to recognize the strong trends and the strong moves in the market with an Ichimoku cloud.
Okay, mate. Why not? That'll be a new one on me as well, I've got to tell you. Mate, your thoughts on when we get over this cloud that's hanging over us at the moment? I got a funny feeling that we're going to have a sustained period of nice technical trading, but I can't see when we're over it. And coronavirus has got to disappear. Trade wars has got to disappear. What else has got to happen?
Oh, mate, yeah. Do you know? This is the thing, and this is you know, the struggle that I've had this morning is because of the gaps, and that is the problem. And that sort of that indicates to you, or to you know, to the listeners, that indicates to one, if you like, to use the Queen's language, the difficulty with trading these markets. These gaps here cause problems, because if you've got a short on at this point, then trying to get out of that short when you see that gap is nigh on impossible. You know, and there's another one down here where you'd be getting out of it now. You know, this is a 1 hour chart, and that was 10th of February. So you're getting out of it 4 days later. Here's another one. You know, you're probably unlikely to be short down here, but still, you know, if you've got shorts in the market, you were trending this to the downside, and then all of a sudden there's a gap in the market, then the gap causes a problem. You know, there's a little gap here. There's another gap that we've seen this morning, which is probably better expressed on a 15-minute chart here. Look at that. It's a huge gap in the market. And the problem is gaps, you know, they don't stick around forever. But what they do create is you know, this it just shows the emotion. When you see a gap in the market, it shows a hell of a lot of emotion. Now, you can get a gap and a fill, or you can get a gap and go. And the most regular that we used to see was a gap and a fill. You know, the market would gap, come up and fill it, and then go. And the gap could create a level of resistance. But with these gap and goes, then it creates problems, because, you know, people are still in the mindset that we're going to get a gap and fill, and all of a sudden they go long to try and fill the gap, and the market just breaks down. And again, you know, back to this same thing here, people would have been expecting at least this gap to close before going long. But it's just not happening, and that's when you talk about when are we going to get back to some technical analysis that we can trust. The gaps are indicative of a market that is full of emotion. Sorry, the gap and go is it's a market which is full of emotion, and there's no two ways about it. Markets that are full of emotion are difficult to trade. And we do seem to be in that current climate, and we have been really for this year. We're only 6 weeks in. So it's a difficult environment right now. The answer of when it's going to clear up, I don't know. Whether maybe we just start to see the new norm, you know, because well, certainly for a period, and I'll tell you the reason why. Because the S&P, I suppose most specifically the Dow and the Nasdaq, have been so bullish to the upside. What it does is it means that every single potential disruption creates a hell of a lot of twitchiness. You know, even the S&P's got a gap here, and that twitchiness can come from things like coronavirus, or a conflict in Iran, or a trade war, because people are concerned. People are concerned that that they've got some longs in the market. They've got they've had their buying opportunity, and they don't want to get caught too high, because the market will get overvalued naturally, and a potential recession will come naturally with worse data. But it's not data which is driving the markets in these hugely emotive moves. It's one-off events, and that makes it, as I say, a very, very difficult environment to trade.
Yes, and generally unheralded events. They
Yes.
just come out of the blue. We don't know when they're happening. That is, a terrible environment to trade in.
Yeah, definitely.
That said, it will end, and I've got no doubt about that. If it doesn't, then we'll find a way to deal with it.
No, exactly, mate. Yeah, we'll just we'll trade slightly. We'll just adjust the way we trade.
Yep,
That's
nothing
the way
new.
to do it.
And
Um,
the longer this does go on, and I know people are hurting in Asia in particular. And I heard today, and anybody who's in Hong Kong now listening to us, I'd be very, very interested to hear if it's factual what I heard. And what I heard was that the streets and the restaurants and just about the whole town, the whole place is operating, and they actually used a figure at 10% capacity. Does that sound like it's even feasible to you guys if you're in Hong Kong? Is that how shut down you are? That to me doesn't smack of, and I believe there's a lot of places throughout Asia that are getting to that point where there are issues in actually getting around the place because it's virtual lockdown. And if I then compute that into my tiny brain, it doesn't smack of risk on to me. It really doesn't. And I know I keep harping on it, but I just don't get it. Is that a fact, guys? Those of you who are in Hong Kong, if there's anyone in the room that's from Hong Kong, is it really shut down to that degree? Nobody's answering me.
Incidentally, I've also joined in the long trade here, so I actually quite fancy the long here. So I've just taken a little bit of a long in the market. I'm not looking for a huge amount of upside, but I am trading the market to the upside now.
Yeah, thanks, LT. Yeah, interesting. So I think what the market is saying at the moment is this is not going to have much impact. I think that's a BS. I absolutely think it's BS.
Yeah, me too, mate.
But anyway, it is what it is, and there's nothing I can do to change that. We just have to be in the right place at the right time, I guess. Okay, very quickly through my 30-minute charts, I see the potential for dollar yen to continue short, but it's only potential. It's not a perfect setup for me. I see that the pound hasn't triggered. I see US dollar CAD is kind of down towards our trade line that we had before. I'll just pinch screen very quickly because we are due to get out of here, guys. And go through these, exactly what I will be looking for in these major currency pairs. So go back to the start. Euro dollar, don't see any potential trades until we get up to here. So nothing to do there. Dollar yen, there's that break and retest of the trade line that I was talking about. One of two things here. And the first thing I see is maybe if I put that on the hourly chart, it's going to look far more interesting to you. It is a clear break of that support trade line and a clear retest of that support trade line. What I've got to convince myself is I can actually get some profit out of this before I hit a support level. So let's investigate that, see if we can. So our risk is going to have to be around about if we're only trading that candle, let's say 9 pips, and we've got 2 up for grabs, it's not a great reward on offer here. And that's why I can't take this trade. What I have to do is wait till it gets back into here, then retest the level and gives us a lower high. That's the way I trade that. So there's no trade for me here right now. The other way, of course, is to get back up to this level and find a confluence area to come back down from there. So no trade on dollar yen currently. Cable hasn't triggered, as I said. It's kind of up and down. If I'm honest with myself, I've got to be thinking there's a potential here for a long above the break of this weekly pivot again. But again, you're trading straight into the highs here. It's a super dangerous trade to take. Best way to do it is let it break to the short side. Does this sound familiar, guys? Let it come back above, then retest it, then go. Because it's far better to trade long off support and short off resistance than it is to trade long at resistance and short at support. It's pretty much a simple formula. Dollar CAD, that's when I said it was coming down towards our trade line. That's perfect spot for us to go long from if we so choose to do. Again, my bias is short here, so I really don't want to trade long. The only way I would consider that, again, is if price broke the support, got back above it and retested it. Could I go short at this point is the question. Well, if I got maybe over to here and got an entry at that level, I've got a potential, I suppose. I hate having to move this control panel all the time. It annoys me. And so I'd be looking at an entry maybe over here somewhere off that trend line. And I've still got an issue with trading into the low of the day. So best case scenario, guess what? Break underneath, retest. Pardon me.
Bless you, mate.
And short, there I go again. It must be time I left. I'm talking too much. Aussie, nothing to do until it gets up to here and look again for a false break short with my bias. Kiwi, exactly the same. Underneath here, retest short with my bias, and Aussie Swiss, absolutely the same. So every single thing is the same. Let it break, come back underneath. So we're playing false breaks, guys. Some are long, some are short, but they're all the same. Okay, that is me done.
Cool. All right, buddy.
Ash?
Yep, I'm done too, mate. I'm done too. Let's wrap it up. We'll be back same trade time, same trade channel on Monday, and see what happens with this market. We definitely fundamentally want to go long, short here, but let's see if these longs play out for us.
Right, mate. Happy days. Guys, thank you so much for being part of the show this week. As I said, lots of new things happening next week. We'll keep you posted on that. For less people travelling, the WTI unexpectedly bounced up, possibly due to support test, but shouldn't it be going down again? FTSE looks down. Wait for stop loss. Wait for stop loss. Swing low. I'm not sure what that means. What's SL? Stop loss.
Stop loss, yeah. Yeah. Oh, I see. They're probably saying should we wait to get taken out, or should we just close it?
Okay.
No, no, don't close it. The only thing is that it might take you out and then still pop up, but there's enough support down here to suggest that we're going to get some upside. Whether we got the timing right, I don't know, but there is enough support down here to suggest we're going to get some upside. So no, leave things as they are.
WTI got an opinion. I think WTI was oversold, and that's why we're seeing a rally at the very least. Whether it can maintain that, I don't know. I know there's an oversupply, or I think I saw an oversupply in the States at the moment, which should be driving the price down, one would have thought. Ash, you got any thoughts?
Yeah, I think that's right. I think WTI is likely to continue to struggle. You know, the coronavirus will affect the supply in oil as well. So don't see too much upside with WTI. So I would sell the rips in that one.
Yep. Okay. Right, guys, got to fly. Love yous and leave yous, as they say here in Australia. And again, have a great weekend, Ash, and everyone in the room. We look forward to catching up with you next week.
You too, buddy. Yeah, have a good one, and have a good one, guys. We'll see you next week.
Hooroo.